Good morning from our global headquarters in New York City. I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda. Fiscal doubts prevail. A soft auction in Japan brings more pain for global bond investors. And the main event, after adding $1 trillion in market cap from the market bottom, Nvidia reports after the market closed today. And a leak, lost control, and disintegration. SpaceX's rocket fails a test for a third consecutive setback. So we are weaker this morning after we were able to snap 4 days of losses, one of the worst weeks last week since the April 2nd Liberation Day. It is softer today, but not by a huge amount, down about 0.2% across the futures for both S&P and NASDAQ. We will get Nvidia after the bell. Will that help revive some of that risk appetite? So much hinges on this huge stock. One of the other things softening risk appetite this morning was a 40-year auction in Japan of bonds over there. That was the weakest since last July. This after the MOF reportedly had sent out a survey to different market participants that they changed their formula. Even so, it was not enough, and you can see the reaction, at least in duration. The front end's doing fine. We're lower by 2 basis points, but your 10-year and 30-year yields are up by at least 2.5 basis points. So those are your overall markets this morning. Let's look at some of the individual stocks, and with that is Bloomberg's Joe Easton. Good morning, Joe.
Hey, Danny. So it is a big day for the tech sector. It's that moment that we get out of bed for the Nvidia quarterly earnings report coming up after the bell today. We're seeing the stock very slightly lower. Now, remember, Nvidia already did a big write-down related to some of the sales that they cannot do to China because of the restrictions that were imposed by the White House. We'll wait to see if there's any update on that, but really a key moment for that sector after the bell. Nvidia, though, down 0.3% today. Then the other earnings report, this one potentially coming before the bell, is Macy's. We're going to get the report out of them, and some analysts saying they may actually scrap their guidance due to weak sales at the retailer and potentially even an impact on tariffs in terms of the cost. Finally, one that's a little bit off the radar. This one is BROG, B-R-O-G. It is an energy company selling a lot of assets, but I do like that ticker, BROG. We're seeing that one up almost 50% this morning, probably going to be one of the biggest movers down in the small cap energy, Bruges gaining, and all of this available on the Before the Bell opening wrap as usual today, Danny.
Joe, appreciate it, and we'll catch up with you later in the hour. Also in this hour, in just moments, we're going to be talking with JPMorgan's Nandini Ramakrishnan. Later this hour, Stephanie Guild of Robinhood on the risk around equities. Also, don't miss our Bloomberg Technology Special. That will be featuring an interview with Nvidia CEO Jensen Huang. That's much later today, 6:30 p.m. Eastern Time. Now, in the meantime, as I mentioned, there was a poor auction in Japan today, and the pressure has resumed on duration, be it the U.S., be it the UK. Already the UK and Japan have taken a leaf out of the U.S.'s book, potentially pulling back on long-term issuance, something that Janet Yellen had done here in the U.S. and resumed by the current administration. Joining us now is Nandini Ramakrishnan, EM Equities Macro Strategist at JPMorgan Asset Management. Nandini, thank you so much for joining us this morning. And this is an interesting one for you because this is something that typically happens in emerging markets. Brazil, Egypt, they can't issue long-term debt because the demand isn't there. Do you see a parallel to what's happening in developed markets right now?
Well, I think we need to understand why this is happening, right? As you mentioned, supply and demand dynamics are definitely one of the culprits for some of the Japanese market dynamics going on right now. But we also have to think about fiscal concerns, especially in the U.S. and Europe, where perhaps governments are spending a bit more than they can necessarily afford. Deficits are widening. This is absolutely an EM concept, something we're very familiar with. But in fact, we've seen quite a lot of fiscal discipline in EMs over the past several years, which is why actually we think this flip in DM markets makes EM slightly more attractive when you think about the countries that have been doing well. It's not necessarily Egypt or Brazil, but countries like India, parts of ASEAN, where issuance has been pretty tame and market demand for long-dated bonds has been actually okay. So I think this is an interesting moment where an EM typical problem has sort of come into DM markets and is really making the playing field quite even globally.
For sure. So does that mean, Nandini, that demand for bonds in general, if it gets sucked out of Japan, the UK, and the US, Does that change allocation to emerging markets? Is there a case to be made if the risk-free attributes we usually assign to something like the U.S. cease to exist or at least are diminished, that money gets spread elsewhere?
Yeah, this is a huge topic we're speaking to with our clients, with our investors internally. Let's make no mistake, I don't think EM government bonds are taking the place of U.S. risk-free rates in terms of asset allocation decisions from kind of capital stacking or risk allocation perspective. But I think definitely the diminishing of that U.S. exceptionalism, or the idea that U.S. treasuries will perform no matter what, the Fed is there, the fiscal side of the U.S. is solid, those questions have made asset allocators think a lot more about, if you want to add some risk and some diversification, you really are looking a lot more at emerging markets who have a lot of space given this macro environment, right? It's playing out the most beautifully in the weaker dollar. And this is great for emerging markets because there's space for EM central banks to cut. Their currencies are strong versus the dollar. There's also quite a lot of diversification within EM, where as investors are looking for countries that don't necessarily have huge impact from the trade and tariff situation, there's countries like India, Brazil, parts of Southeast Asia, Middle East, actually, that have very little of their equity market revenues come from trade or exports. And so when you can find these pockets within EM or just generally non-US equity markets, it's actually becoming quite interesting for investors to pivot a little bit away from the classic US S&P 500 trade to thinking about where you can find economies and equity indices that are more immune to global effects like trade and fiscal worries that are going on in the U.S. currently.
How are you viewing, to what extent, other emerging markets are immune from global trade, Nandini? Because in Trump 1.0, companies had a huge restructuring in that they moved away from China. They moved into different, especially South Asian markets in order to avoid some of the tariffs. This time around, we're talking about at least a 10% baseline tariff on all of those nations, if not more, in places like Vietnam, where discussions there were really rapid in the beginning but have since gone quiet. What is the corporate appetite at this moment to move into some of those nations? Or is it a standstill? Is it a freeze?
I think the uncertainty that the tariff negotiations and everything that has happened since the beginning of April have certainly made companies globally very concerned. You can see the mentions of uncertainty or tariffs in earnings calls globally has risen exponentially. So I think it's a very difficult environment for corporates to make decisions about reshoring. The good news is a lot of them from Trade War 1.0 have been diversifying their supply chain, a lot of that moving from China into Southeast Asia, into parts of India. But make no mistake, I don't think we're saying, Vietnam is going to win on the trade scorecard here. There's a huge amount of dependency on exporting to the U.S., not a lot of negotiation room for a country like Vietnam. But where there is space is countries that have low labor costs. So again, India and some parts of Southeast Asia score well on that. There's countries that don't currently have a lot of dependency on the U.S. who might be willing to increase their manufacturing capacity. So we have a lot of metrics by which we score possibility for corporates to move their production centers into other countries. But I think the unfortunate issue is that uncertainty regarding the actual tariff numbers does delay some of these decisions. But we do think that there is slow migration, slow diversification of those supply chains to make the global trade much more resilient. And companies that have already been doing that, we track several of those, have been more successful in terms of equity price or forward earnings guidance because of their forward thinking about this kind of reshoring and diversification of supply chain theme.
Well, one thing that was supposed to help, or at least allow temporary reprieve, was a delay to or a walk back of the 145% tariff on China, now just 30%. And indeed, the story around there, the narrative had shifted to one of, okay, all of a sudden we're going to get this pull forward. Surely shipping between the U.S. and China will take off. Torsten Slok of Apollo, though, has pointed out that there hasn't really been a rebound in trade between the U.S. and China. That's the chart we're looking at the moment, that if you look all the way on the end, shipments from China to U.S. have held on to that drop. I wonder what you make of that we haven't really seen this pull forward, this rush to get goods into America after that relief.
Yes, I think that chart and what's happening currently in terms of that uncertainty in terms of export and import decisions is a feature of quite what the shock was to the market from those early April tariff announcements. I don't think China is going to resume back up into its export dominance into the U.S., partly because even if it's 10%, let alone the much higher number of tariffs on many Chinese imports into the U.S., prices are still high. Sellers in the U.S., retailers, are going to be concerned about how they can pass through or not pass through that extra cost. So I think the situation for China from a macro perspective is definitely having to lean away from simple export dependency and thinking about how to find other ways, whether it's rerouting some of the goods through manufacturing them in other parts of Asia or the global south, as we just discussed, or perhaps finding more domestic demand for those products. And that's actually the big theme for us in China is, yes, the domestic macro situation has been very challenged in the past, the property market facing a lot of weakness last year, but we do think the worst is behind us. And if consumers in China can slowly get those green shoots of spending, some consumption back, that export that traditionally went to the U.S. could probably find some home in China. Now, that's a really rosy picture. I think we have a lot of stimulus announcements to come before we get to a really recovered consumer in China, but I think it's a wake-up call for Beijing to think about how do we get this stimulus to work, to actually absorb some of that excess export capacity that would have gone to the U.S. that now, unfortunately, as that chart shows, may not necessarily recover.
Nandini, such an interesting conversation. We really are going through some big changes right now. Thank you so much for joining us this morning. JPMorgan's Nandini Ramakrishnan. Let's get you some other stories now that are trending on the terminal this morning. And we had a third setback in a row for Elon Musk's SpaceX. A Starship rocket was destroyed during a test flight on Tuesday after suffering a leak, tumbling out of control in space, and disintegrating as it hurtled back towards Earth. Spaceship is critical to Musk's vision to transport people to Mars. And as we've been discussing, more pain for global bonds after a 40-year auction in Japan saw the weakest demand since July. That weak appetite puts additional pressure on the government to reduce issuance after a report of a survey that the MOF was looking at doing just that. Citadel Securities reported record profit and trading revenue in the first quarter of the year. Bloomberg sources say market volatility allowed the firm to post $3.4 billion in net trading revenue in the first 3 months. That's up 45% from the same period last year. Coming up, Musk's disappointment. The billionaire expresses frustration over the big, beautiful bill and how he says it will undermine the work of Doge. We'll discuss. That's coming up next on your Bloomberg Brief.
I was disappointed to see the massive spending bill, frankly, which increases the budget deficit, not just decrease it, and undermines the work that the Doge team is doing.
Some concerns of the deficit hawks among the Republicans who believe that the GOP's big, beautiful bill costs too much and demand more spending reductions. Joining us now is Bloomberg's Bill Ferries. Bill, one of the things I take away from this is the degree to which Musk's influence has started to wane. At one point, there was a concern that if you didn't fall under line behind him, he would primary a lot of people. But it seems that these concerns that the deficit is ballooning, not really breaking through this bill, making its way through Washington, D.C.
Yeah, I think since Musk has kind of stepped away from those Doge efforts, he said he's going to focus a lot more on his companies, including Tesla and SpaceX, that his influence has waned. He's not at the White House quite as often. And I think, but I also think if you thought he was leaving politics totally behind, those are the kind of comments that shows he's still going to kind of poke his finger into things. But he's really echoing the complaints that a lot of the more conservative Republicans in the House and the Senate have. The Republicans in the Senate, including Ron Johnson, have almost said that this bill is dead on arrival, that they don't like the cuts to Medicaid, that they don't like the revenue projections they're seeing. You have other Republicans saying that the cuts to spending just don't go far enough. So I think there's little doubt that the president's big, beautiful bill, as he likes to call it, is going to undergo some substantial change, and that means it'll have to go back to the House, and there's going to be another dogfight to try to get something that both chambers agree to passed and sent to the president's desk.
Yeah, Ron Johnson saying yesterday, we are far away from an acceptable bill, and it's hard to say in terms of the timing. Elsewhere, Bill, there was some news around Fannie Mae and Freddie, the president posting on Truth Social, essentially saying that they would be privatizing the gains by taking Fannie and Freddie public, but socializing the losses with a not so implicit guarantee, which is what he called it. What does the future of these companies look like?
Well, this is something President Trump has been talking about since his first term. He really he had put then Treasury Secretary Steve Mnuchin on the job of trying to find a way to kind of end this conservatorship that's been in place now for almost 17 years. The shares continue to trade over the counter, of course, but as you said, the revenue generated goes to the government. The government has been paid back, I think it was $191 billion that it first poured into Fannie Mae. But I think this implicit guarantee was always there, the president making it explicit, but it's still not clear how that's going to work out and what it really means and how much the government is willing to foot the losses going forward if there is another big housing crisis.
I was going to say, it feels like the great financial crisis is so far from our memories that we look at something like this and don't even blink. Bill, we also had some news when it comes to Nippon Steel finally getting the approval to do the deal with U.S. Steel, but the U.S. is not ceding its control over this new entity. What is the so-called golden share that the U.S. will retain in this new company?
Yeah, I think there's still more questions than answers so far. But the U.S. indicating that there will be this golden share that effectively gives the U.S. government a veto over certain major decisions. Our understanding is that the board of the new company would have a U.S. CEO, a board dominated by Americans, but with obviously Nippon Steel officials or executives as part of that. It seems like the kind of agreement that would allow the U.S. to veto things like job cuts and production cuts that it doesn't want, while green-lighting increases in hirings and things like that. It's really hard to understand how that fits in with Nippon Steel's original proposal. They put forward a $14 billion buyout plan. We know about the golden visa. We don't know really what some of these other details are and how this figures into the company's restructuring.
Bill, thank you so much for that update. We always appreciate it. That is Bloomberg's Bill Ferries, and you're watching Bloomberg Brief. Let's take a look at the front pages this morning and what's making headlines around the world. First up, Shein is looking to IPO in Hong Kong instead of London. Sources telling Reuters that the fast fashion giant hasn't received approval from Chinese regulators to list in the UK. An initial attempt to list in the U.S. was also derailed amid supply chain and labor practice scrutiny. Next up, the FT reporting an hour ago or thereabouts that the ECB President Christine Lagarde has been discussing leaving the central bank to chair the World Economic Forum. WEF founder Klaus Schwab told the FT that Lagarde had been at the center of a plan to replace him for years. Lagarde's tenure at the ECB is supposed to end in 2027. Finally, the Wall Street Journal leading on their front page with bets that the worst of Trump's trade war is now in the rearview mirror. The latest sign for investors was an easing tensions between the U.S. and EU last week, which preceded a 2% jump in the S&P on Tuesday. Now, meanwhile, Stellantis shares, those are slightly lower in the pre-market, but we did get news that the automaker has appointed its Americas head, Antonio Filosa, as its CEO. Joining us now is Bloomberg's managing editor for Southern Europe, Tommaso Ebthart. Tommaso, we have a new CEO. What do we know about him?
Hi, good morning. We know that Antonio Filosa, Italian, born in Naples, has been working at Fiat for over 25 years. He started in Italy, then moved to Brazil. He was the head of the Brazil unit for several years. It was one of the most important units for Fiat Chrysler, and later he was appointed as head of North America. He's clearly a person coming from inside the organization. He was very close to the former CEO Sergio Marchionne, who dubbed this younger manager under him as the young punks who were going to lead the organization organization at a certain point. But the moment has arrived for Antonio Filosa. His appointment clearly shows two things. One is that Stellantis is facing a very complex period. They need a person who comes from inside to run the organization. And second, the importance of North America is the main market for Stellantis, and Filosa, being an Italian, grew up in Brazil as a manager, now was leading North America, and this showed that North America and the US is really central for Stellantis.
That is an interesting point, because it is also sliding sales that they are grappling with, not just in Europe, but the U.S. too. What is the turnaround effort that this new CEO is going to have to undertake? Just how mammoth is the task, Tommaso?
But clearly, he has to start from Detroit, from the Jeep brand, which used to be a cash cow for Fiat Chrysler and now for Stellantis. So he really has to fix the North American business, because this is where most of the profit can come from. And then he has to lead a transition in Europe to electric vehicles. It's going to be a long transition, a difficult transition for the old continent. And then he also has to look at Asia and at China, where innovation is coming from, and which is now the biggest world market for cars.
Tommaso, thank you so much for joining us this morning. Big changes at Stellantis. Tommaso Ebhart there. Now, coming up, we're going to catch up with Stephanie Guild of Robinhood on how stocks could continue to grind higher from here. They're taking a breather this morning with your futures down about 0.3%. This is Bloomberg. From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Fiscal doubts prevail. A soft auction in Japan brings more pain for global bond investors. And the main event, after adding $1 trillion from the market bottom, Nvidia reports after the market closed today. And a leak, lost control, and disintegration. SpaceX's rocket fails its test for a third consecutive setback. Well, we were able to snap 4 days of losses yesterday, but today it is a weaker future session. Not by any huge amount, but we are down about 0.2% for your S&P and NASDAQ 100 futures. We'll get those Nvidia results after the bell. Will that turn things around? But in the meantime, it was a weakness for a 40-year Japanese auction. That even though we had reports of authorities suggesting that they might make moves to ease those concerns of pulling back on duration auctions and duration supply. Even so, that poor auction means that duration in the U.S. getting hit this morning, higher by about 2.5 basis points for your 10 and 30-year yields. But meanwhile, that front end stays well anchored thanks to the Fed. That's lower by 2 basis points at 3.95. Those are your overall markets. Let's get some stocks to watch. Here with that is Bloomberg's Joe Easton. Hey, Joe.
Hey, Danny. So it is a big day for the tech sector. We will get Nvidia numbers after the close of trading today. As you said, they're the main event, the moment that we get out of bed for the stock market in terms of the tech space. We can see it ticking to unchanged at the moment. You don't want to be piling into that one ahead of that report, but we should see some volatility coming into Nvidia when that results report hits later today. Then in terms of the other one coming out, we've also got Macy's. This in retail, potentially going to be pulling their forecast according to analysts. That's what I read on the previews in terms of that one. Potentially some impact from tariffs coming through into Macy's as well, so keep an eye on that one. That one should be out before the bell. And then finally, Bruges Energy down in the small caps. We don't look at this one too much, but I do like the ticker BROG. BROG got a nice ring to it. That one up 67% in the pre-market. They're offloading a load of assets based in the Middle East, so potentially that one is going to be a sharp rise. There's going to be some happy BROG investors later today. Keep an eye on that one at the open of trading. Danny.
Hey, Joe, really appreciate it. And yeah, what a way to invest. Just choose the tickers you like. I think that's a great strategy. Joe Easton there. Thanks for your work this morning. Now, elsewhere, U.S. stocks have posted a 19% rally just thereabouts from the April nadir. Barclays analyst Emmanuel Ko among those who say that the path of least resistance is stocks higher with positioning still low. He wrote that absent a volatility shock, systematic buying could continue to help equities to grind higher. Let's add another expert voice to the conversation. Joining us now is Stephanie Stephanie Guild, CIO of Robinhood. Stephanie, it's a market that people are hesitant to be too bearish on. Would you agree with that the path of least resistance is higher from here?
Yeah, I think the whipsaw factor is high, is like I like to say, because if you get too bearish and you really focus too much on the negatives and the risks in the marketplace, you could end up being, caught flat-footed. I think of it as like when you're driving and you have to really focus, you turn down the radio. The sound has nothing to do with it, but you kind of have to focus, like turn down the sound and say like, okay, what are the opportunities? What are the risks? And despite the fact that the overall market doesn't look as attractive as it might have at its lows this year, there are still opportunities. We're seeing mid caps is actually cheap. They're at 14.5 times. The long-term 10-year, excluding 2020, was 19 times. And the other thing I would say is that at the stock level, there really are many opportunities. And so that's where I think you kind of have to like focus. And at the equity, kind of broader equity level, sort of neutral to holding a little bit of dry powder.
By the way, I love that metaphor because we all do it. It makes no sense. You turn down our loud music and it helps us see.
You cut one of the senses out and heighten the other one.
Exactly, Stephanie. So as you're sorting through and seeing what makes sense, I was looking that you're kind of envisioning two different scenarios.
Yeah.
One in which low tariffs doesn't really affect the economy and you can buy cyclical growth. The one in which it does and you lean towards non-cyclical growth.
Yeah.
Those are two bipolar outcomes.
I had a third one, but actually just tried
one?
to be more focused. Well, I was like being more like kind of dividend stocks and cash, dry powder, and then kind of low volatility stocks.
Well, one is definitely more risk friendly, one's more risk adverse.
Yeah.
But when we know the outcome of what tariffs will actually look like and what it does to the economy, it feels like it's so far away. So what do you do in the meantime before you can really get that gauge?
So it's not that. July 9th is like the next, right? And I think there's another one in August for the China tariffs. So it's actually not that far away. I think, if you look back historically at the market too, it's not sell in May and go away, but it's sell in July and go away. So I'm sort of thinking that there is continued opportunities. We still have earnings coming out. And you do have a little bit of a balance with a bias in that non-cyclical growth theme, because I do think growth continues to be in question, and also interest rates are the thing that I'm most worried about, actually, because you also have the budget debates, which need to be solved by July sometime. Otherwise, the government needs to shut down. And that looks scary. I mean, there's some senators in, the Senate that actually do want to cut the growing deficit. But the one that passed in the House is not. We did have that auction that tailed. Not that different from Japan. Japan, however, has a greater debt to GDP. So I think you want to be diversified. And I think you want to make sure you have some foreign stocks in your portfolio. If you're a U.S. investor, I think you want to make sure you have a little bit of dry powder to take care of the times when we do have those tariff scares. And I think you want to focus on areas that are going to grow kind of through this, right? Like, turn down the volume and focus on what can grow through this.
Right.
And for those long-term positions.
It was interesting. We were talking with JPMorgan's Nandini Ramakrishnan earlier, who's an EM strategist, and was saying what's happening with long duration yields in the dollar looks a lot like EM. It's a sentiment that's been echoed elsewhere, where there's less demand.
Yesterday.
Well, so what does that mean for the equity market then? Is there not some risk that investors just pull away from U.S. assets in general? Because they're certainly at least nervous when it comes to rates and the currency.
I mean, I think you've already started to see that. Like, that's why you've seen international stocks do better than the U.S. this year. I think you also, if the dollar isn't going to be as strong as it was before because its kind of power or dominance is in question, then that's an even more reason to make sure you have diversity in your portfolio globally. And I think up until even this year, that wasn't something that really mattered that much. Like, you could just completely be in the U.S.
Do you do that within the U.S., i.e. you choose the global companies who have that international exposure and also might get a help from a weaker dollar?
That's not necessarily the way we've been playing it, although we do have some global companies in our portfolios, but our Robinhood Strategies portfolios, by the way, but we have been allocating to specific things like Japan, actually, but currency hedge Japan because we're not sure what's going to happen with rates relative to the U.S. We've been investing in Chinese tech companies because we actually think that they're really undervalued, and they do have that kind of through the growth, right? And AI is a big theme in China. And then we do have some large cap European stocks. So we've kind of been going across.
Speaking of tech, if I can just jump in, we are going to get Nvidia later today. How much will that color not just your allocation to Nvidia itself, but some of these AI names?
I mean, expectations for this quarter are not that high. If you look, like, I think it's 19% growth, and this time last year was like 400% growth. So I was worried last quarter more because I was afraid that expectations had gotten too high. And I think that is everything when it comes to this name. We actually have seen our own our own customers. It was something they were jumping into a lot when the stock price was down, but in true fashion of what they do, when the stock price appreciates, they tend to trim. So they've been taking some money off the table. We have a small allocation in our portfolios, but we're certainly not overweight. We're kind of applying, like, maybe feels like I'm kind of like playing too much on both sides, but a 60% chance that they beat.
Right.
I do think it's interesting that Jensen Huang's going on TV after earnings.
6:30 p.m. Bloomberg TV. Just let me get that plug in. Yes, continue, Stephanie.
Because why would he want to be kind of all over if there was something bad to say? But if expectations have already, like, if they're expected to, if they don't at least beat expectations and it's, and they just meet them, like we're seeing that across the board. If you meet them, it's not good enough.
Or to play devil's advocate, maybe he wants to massage the message if things aren't great.
That's actually, that could be true. That's why we're not taking a big bet.
Honestly, the theme of the year, be prepared for very vastly different outcomes. Stephanie, I'm afraid we're going to have to leave it there. We could do this all day. Thank you so much for joining. That is Stephanie Guild of Robinhood. Let's get you now some other top stories that are trending on the terminal this morning. As we've been talking about, more pain for global bonds after a 40-year auction in Japan saw the weakest demand since July. That weak demand, despite reports that Japan was surveying market participants on adjusting issuance. Citadel Securities, meanwhile, reported record profit and trading revenue in the first quarter of the year. Bloomberg sources say that the market-making giant managed to ride market volatility, posting $3.4 billion net trading revenue in the first 3 months. That's up 45% from the same period last year. Wealthy customers of UBS are looking to buy more alternative assets as they look to diversify during a period of heightened volatility for global markets. Sounds familiar. The firm's Asia-Pacific chief Iqbal Khan spoke to Bloomberg in Hong Kong.
We've definitely seen a significant growth of alternatives and alternative investments in clients' portfolios. It is still at a lower percentage when you think about an aggregated perspective of wealth portfolios. So there's probably still some way to go in terms of diversification into alts.
Coming up, a SpaceX setback. The Starship rocket loses control in another test failure for the company. More on that story coming up next. This is Bloomberg. You can see there the red fire, another setback for SpaceX. More like smoke, I guess. There's some fire for you. Its Starship rocket lost control in space and disintegrated during a test flight. The stakes were particularly high after flights in January and March were cut short just minutes after takeoff when the Starcraft exploded. Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, do we know what went wrong?
Not precisely, and I think, we're waiting for that data readout to come back from the SpaceX team. But, we've kind of come, I guess, a bit used to the routine of SpaceX sending rockets up. But this is like a huge endeavor, incredibly enormous rocket, very complex. I think obviously they would have wanted it to go better. I think Elon Musk was talking about an 80% probability that it would be okay. But that still leaves 20% of tail risk. So some setbacks there for them to figure out. But it will definitely not dim their ambition to kind of get this ship up and running, and potentially an unmanned voyage to Mars in the next year or two.
Well, we continue to have these timelines from SpaceX, from Elon Musk, that get challenged. How much of a challenge is this to that timeline, Matt? How big of a setback exactly is it?
Not insignificant. I mean, it could be probably measured in months, I think, in terms of the progress against what's a kind of long slate of test flights. But certainly when you think about manned trips to Mars, you need to have had at least a few successful unmanned trips to understand what's really kind of going on and what happens when you do these kind of deep voyages. So I think there's still optimism about the time frame for any kind of mission to Mars, whether it's manned or unmanned, and it'll, I think, almost inevitably continue to get pushed out. We've seen that with the NASA mission already anyway. But I think we're not far away from Elon Musk sending some kind of mission to Mars. It's measured in low numbers of years, I think.
And maybe some renewed hope that Musk is concentrating on his companies instead of the government now. Maybe that will help. Matt, thank you so much. Matt Bloxham of Bloomberg Intelligence. Just want to bring you some lines from our autos team over at Bloomberg that Volvo Cars, the facility in the U.S., is currently paused due to supply chain issues. Just another automaker really feeling the pain. We don't have the specific of what the issue is in terms of that supply chain, but they have felt trade tensions really acutely. Journal, Reuters, others reporting yesterday that they're slashing about 3,000 jobs, Volvo Cars, mostly white collar, in reaction to both the EV demand slowdown and global trade turmoil. So that's one stock to keep your eye on there. Now, Nvidia, another one. It is little change in the pre-market, a little bit weaker, actually stronger now, I should say, up about 0.1%. It is leading Mag 7 stocks. It did yesterday on Tuesday, and it has from the April bottom. The chipmaker is the world's second largest company by market cap. It remains front and center for investors who are trying to gauge what exactly is going on with AI. Joining us now is Bloomberg Intelligence senior tech analyst Mandeep Singh. Mandeep, great to see you this morning. What are you expecting from Nvidia?
Yeah, I mean, we know the consensus expectations are $44 billion in revenue this quarter. And look, they have traditionally beat and raised. So the expectation is there will be at least $4 billion in sequential increase. So somewhere around 47 to 48 billion for next quarter. The caveat there is they took a write down on the Chinese revenue, and that was almost $15 billion. So if you factor that in, we're talking about overall 7% of their overall revenue being written down. So I'm just curious how they end up, guiding for the next quarter, because it's not that obvious where that beat and raise will come from, even though they've signed a couple of deals in the Middle East and everything else has been positive in terms of ChatGPT users going up. So overall demand side looks great, apart from, the Chinese write down, which I think will weigh in on the expectations for next quarter.
Mandeep, just how different of a year is this for Nvidia? It used to be, unless they delivered something that was an 100, 200% revenue increase, we would all be disappointed. It feels different this time, that the expectations are much lower. Just how low are expectations, given what you're saying, given the write down that they've already announced for China?
I mean, I wouldn't call it, expectations have tapered, because they're a much bigger company now. They'll end up doing $200 billion in overall revenue for the year. So clearly it's harder to grow at triple digits when you are, that size business. And look, they're still the fastest growing among the Mag 7 companies. So a company that's delivering over 50% growth, that's phenomenal for a company of Nvidia's size. I do agree with your assessment that, they are still a single kind of trick business when it comes to selling chips. They don't have a ton of diversification like the other Mag 7, but clearly there is a long runway given this is an AI supercycle and everyone believes in that. It's just that there will be an air pocket at some point, and everyone is trying to figure out when that air pocket and that digestion will be in the AI infrastructure supercycle.
What could cause that air pocket, Mandeep? Because to your point, all the hyperscaler earnings we saw, be it Meta, be it Alphabet, are still spending huge amounts on CapEx when it comes to AI and data centers.
Yeah, so you're right. I mean, next year may turn out to be another good year in terms of CapEx, and that's the wild card, right? So if all the hyperscalers continue with their spend next year, I think Nvidia numbers may actually be revised upward despite the Chinese headwind. And they are coming up with a variant for the Chinese shipping to China as well. So there are a lot of unknowns, but you're right. I think that is the most important factor when it comes to sustaining this momentum in terms of CapEx from hyperscalers.
Mandeep, thank you so much for joining us early this morning. Looking to catching up with you after those results as well. Mandeep Singh of Bloomberg Intelligence. And don't miss our Bloomberg Technology special. We'll have an interview with Nvidia CEO Jensen Huang. You're going to want to stay with us for that. That will air around 6:30 p.m. New York time. Now, along with tech and Nvidia earnings, before the market open, we'll be getting some retail earnings. Macy's among them. Those shares are higher in the pre-market ahead of their first quarter results. For more, let's bring in Bloomberg's Andrea Felstead. Andrea, I guess you could say the retailer earnings have been uneven, let's call it. What is the expectation for Macy's?
Well, it's very interesting with Macy's. One thing that I'll be particularly looking out for is whether they are getting any benefit from some of the other turmoil in the department store space. We obviously had a new CEO at Kohl's, or the CEO left Kohl's abruptly. Saks is having issues. So it'll be really interesting to see whether Macy's turnaround is gathering speed and it's picking up some customers from these other stores.
Well, even the results that have been good, Walmart, Home Depot, again, posting strong results, but you continue to see this through line of value-seeking customers, that they aren't doing large ticket spends. For someone like a Macy's, when they are in the midst of this turnaround, how much do these companies need to focus on value strategies given the overall environment?
Absolutely. Value is key. In this type of environment, even if you have the money to spend, you're going to think twice about, spending it. And you've got someone like Walmart, the home of low prices, but even they've got competition with Aldi, the European discounter that's, expanding across the US. So value's got to be on everybody's mind.
Andrew, what just is your read? I mean, we'll have Macy's in the pocket after today, but what has been your read on this earnings season and where retailers stand?
It's obviously all tariff dominated. What's going to happen with tariffs is the key thing. Whether those very high tariffs, Vietnam, those very high tariffs on China are paused or they come back, that is a key thing. And what has that done to consumer confidence? There did seem to be sort of an immediate pullback from spending around the time of Liberation Day. That feels like it's perhaps loosened a little bit. But, what happens with tariffs? What happens with the consumer? What's going to happen with the supply chain? We have this window to bring in goods. Is it going to be a tsunami or is it going to be a trickle? All those things are still very up in the air.
And again, it's remarkable to see that China and U.S. trade really has not ticked up, those shipments remaining low despite that pause. Andrea, always wonderful to speak with you. Andrea Felstead of Bloomberg Opinion. Coming up, earnings galore. We're going to set you up on what's ahead, including Macy's, including Nvidia. All that to come in your trading diary on your Bloomberg Brief. All right, let's set you up for your trading day on this Wednesday on a holiday shortened week. We're going to get some retail earnings. Macy's, Dick's Sporting Goods, Abercrombie & Fitch, they all report before the bell. Then we'll get the latest Fed minutes, 2 p.m. Eastern. And then it's the main event, Nvidia earnings before the close. We'll also have an interview with Jensen Huang, the CEO, at 6:30 p.m. Now, some individual stocks on the move. Now, AMC is weaker today. But it should be noted that they closed 24% higher on Tuesday, a record weekend admissions revenue for Memorial Day. We have it on good authority, a.k.a. our producer Maureen, that Mission Impossible was indeed a good movie, so go out and see it. Okta, that is extending post-earnings declines. It gave a weaker than expected outlook. Finally, Nvidia, again, you just want to keep your eye on this. It will be reporting after the market close. So much hope being pinned on the stock after it led us up from the April nadir. Now, just as we go to break, I want to take you out on a view of what yields are doing because duration is getting hurt again after a weak 40-year auction in Japan. Are things changing? Are we starting that buyer strike for long-term debt? All right, that's it for your brief. Surveillance will take things from here.